Hello traders, this is Blake Morrow and you are listening to the week ahead video for February 2nd, 2020. I hope everybody's having a great weekend and happy Super Bowl Sunday for those of you that are watching the Super Bowl today. Real quick, I just wanted to let you know that I'm having some technical difficulties. Our fiber cable has been down in our area literally all day since I got up at 4 o'clock this morning. Don't ask why I get up at 4 o'clock in the morning on a Sunday. It just part of trading from the West Coast of the United States, I guess. But anyway, I'm just letting you guys know that just because I'm going to make this rather quick. But it's really important because we have obviously so much happening this next week. Being non-farm payroll week, and obviously the coronavirus is weighing on everybody's mind. So let's take a real quick look at the market and where we think things are going to go. Now, before I do this, I do need to mention if you haven't tried out ForexAnalytix, do so. It's only $1 for 10 days. So sign up, try it out. This way you can join our team and you can be in our chat rooms, in our private member chat room. Now, just remember we have two options. We have the premium service and we also have the light version. It's $19 a month or $119 a month. The premium version gets you into the chat room and full access of all the advanced analysis that we do. But when you're trying it out, you get it all for $1 for 10 days. So give it a whirl. All right. Now, obviously, and by the way, I am running off of I'm doing all this from a hotspot on my phone. So if things are running a little slow as far as the charts and the analysis I pull up, that's the reason why today. And it's not normally this way. Believe me, I'm very frustrated at the moment, considering it has been 7 hours and I'm still dealing with internet issues. So let's talk about the markets and kind of what we're dealing with over the weekend. Obviously, the coronavirus is still, it's still picking up steam, as you would expect, because there were, it couldn't have been the worst time for this to happen, as it was during the Lunar New Year. You had all these Chinese folks traveling around the country and abroad, and probably through the incubation period. So I would expect that the numbers continue to worsen for the next couple of weeks before they get better. There are some promising, vaccines that they're working on. China is going to be injecting a lot of liquidity into the markets. As they open, they're banning short selling. So I would expect that any downside that you see in equities might be limited, but I do want to point out, if you pull up the S&P chart, and here, let me pull up the daily chart really quick. You can see the S&P had broke some pretty key support, and the move below the 3240 level ushered in this move down to 3200. Now, I do believe that if we drop below 3200, we're probably going towards 3150. And let me pull up my S&P charts really quick so you can kind of see what I'm talking about. Like I said, the charts are running a little slow here, so just bear with me. You can see we're at a 24% retracement of this would be the trend low right here. Let me grab that fib if I can. Oops, there we go. There's a spike low. So we're challenging the 24% retracement. The 38% retracement comes in at 3150. This is also a pretty key breakout area. So I would assume around the 3150 to 3160 is where we're going to find some sort of support in the market. You can see that the bounce stopped at the 618. That was pretty key. Stopped at the 618 at 3,300. Friday, the market came under a little bit of pressure. No one wanted to be long over the weekend. But I'm going to tell you this right now, and I have this on my phone and not on this computer right now. We closed in the dollar yen. We closed at 108.33. Okay, that's where we closed the dollar yen at. It's bid right now at 108.37. So we're going to actually open a little higher in the dollar yen. That suggests to me that risk appetite is going to, people are probably saying, you know what, we're past the worst of this. We got China stepping in with all this liquidity, yada, yada, yada. personally, I would see how the dollar yen reacts when it gets back to 108.50, 108.60. Somewhere up here is probably where we're going to be looking for some sort of reaction in the dollar yen. The 78% retracement of this last move comes in at 108 and a quarter, basically 108.20. So I would venture to guess that at the open we're going to do this. How we react up here at 108.75, I think that's going to be pretty key. All right, one of the other things that you might have seen is you've seen the euro dollar. Euro dollar was squeezing. It's actually pretty well bid. We're about where we closed right now pre-market. I'm looking at the quotes, and we're running around 110.90. That's about where we closed. The euro dollar has this inverted head and shoulder pattern, and we completed it. Now, what I would be looking at for the euro is, let me delete some of this stuff, or actually let me change this over really quick. Okay. The 50% retracement comes in about 111.15, and you see some spike highs around 111.20 right through here. So this is probably going to be pretty key resistance as we make our way up and towards this resistance. That I'm assuming is going to be pretty critical. The cable. Also, the cable looked pretty good as we came through this triangle pattern. Big resistance going to come up at 132.70. Let me take a look really quick. Yeah, we closed at 132. Right now, it's about 132 is where it's pre-market activity. So 132.80 is going to be a pretty key resistance. It is the 618, previous 618. Remember, we are past Brexit now, or I guess the UK is officially not in the EU, but it's all about the negotiations moving forward regarding trade. That's what's going to be really important. Now, one of the things I was talking to a gentleman that I trade with, and one thing that is going to alert me if this market is going to accelerate lower, and when I say this market, I should say the stock market just in general, whether you're talking about the S&P, the DAX, the Nikkei, the Hang Seng, whatever whatever markets you're looking at, keep an eye on the US dollar Mexican peso. This previous support will act as current resistance. That is at 19, basically. If we move above 19 in the days ahead, that's when I'm going to be a little worried that the market is very concerned about what's happening. The reason why I say that is, and we're trading at around 1885 right now pre-market, so we're about where we closed. The reason why I say that, guys, is because, as you know, the Mexican peso is the ultimate carry trade. All right, it is the ultimate carry trade is right now in this time is buying Mexican pesos, selling everything else. You capture a really great carry. If you see that trend reverse and you start to see the market selling pesos aggressively, and in my opinion, aggressively would be above 19, that's when I would be really concerned about risk appetite in general. I'd be really concerned about the stock market and what key levels are we looking to break if we break 19 in the dollar Mexican peso. That would signal to me that the market is really worried about what's happening. All right. A couple things I want to mention just really quick before I let you go. The dollar yen's really big. Obviously, the Aussie's trading heavy for obvious reasons. The Aussie dollar is, we're threatening, a move below 66, 66.80, and that would usher in a move down towards, you're talking 65 cents, possibly 66, 65 cents. It looks like it's going to hold for now, but as we're trading right now at 66.87 bid. The average of that is about 60, I'd say roughly 66.95. We closed at 66.86. So we're bid up a little bit pre-market in the Aussie dollar. But that doesn't mean anything if we break through this support, because if we break through this support, it's going to clear out all the stops below the lows. I mean, and there's probably a lot of stops that are building below these lows. And one last thing I wanted to mention to you guys, regarding this week, and like I said, I've been dealing with no internet connection for the for the last several hours. So my research isn't the best right now, but I will tell you this is jobs report Friday. So we're gonna have our non-farm payrolls. They're going to be really scrutinized going into the beginning of the year. So just keep in mind we're looking at 150,000 jobs as of right now. What the market's looking at is 150,000 jobs. As we come closer to these numbers, we'll keep you abreast of what the market's looking for based on some of the data that we get this week, especially with the ISMs, because and you'll get our thoughts on the face webinar throughout the course of the week. But just keep in mind it is non-farm payroll week, and it's Canadian employment as well. So if you want more information as we get closer, listen to our free webinars that we offer throughout the course of the week, every day. All right, guys and gals. So again, be careful out there. It's probably going to be pretty volatile. Thank goodness we're starting to see volatility pick up. I will look forward to speaking with you all on the FACE webinar tomorrow morning. Hope I can be there. You guys have a great one, and enjoy the Super Bowl for those of you watching. All right, bye-bye.